I'm Owen Bigland. This is the Inside Edge video blog. Okay, part two on what's currently going on with the COVID-19 epidemic, the coronavirus. Last week I talked about, where we're currently at with the Vancouver real estate market, and keep in mind that this is changing day by day, hour by hour, and we're in uncharted territory here. This one I want to talk about the financial markets, and if you've been following me on Twitter, if you're not, if you want to get more up to date on what I'm doing and what I'm thinking and some good articles and things that I'm posting on investing, follow me on Twitter at Owen Bigland. That's where you'll get all my thoughts. And as always, I'm 100% transparent on my Twitter feed. That's why I do it, because there's a timeline there. And I've never deleted a tweet. I've been tweeting now for the last month on what I'm seeing from the market. I've been putting out there some of the stocks and ETFs that I've been buying in this market correction. It's all there for you. And I get a lot of guys that will criticize me too on there, saying, hey, your market's crashing, you're going to lose money, this and that. Hey, I'm fine with that. I'm not trying to time a bottom. I'm not a speculator. I'm a long-term investor. If you've read my book, the whole foundation of my investing is to buy the highest quality companies I can that have incredible cash flows, strong balance sheets, pay me not only a juicy dividend check every 4 months, but have a 20, 30, 40, 50-year history of increasing that dividend every single year. You build a $10 million portfolio, that's generating a 5% yield, you're going to be earning $500,000 a year completely passive. And that $500,000 next year will be up to $510,000 a year or $550,000 the year after that. I know I'm using big numbers there, but that's what my portfolio is based off of. I'm not concerned all that much, really at all, about what the total value of my portfolio is. So let me put this out there for you guys. And I'm not putting this out there to brag or look at how much money I've got or what I've created here in any way. If you've read my book, that I talk about the crash of 08 and 09, where my portfolio was cut in half. That correction was kind of a death by 1,000 paper cuts. It was some rough days where it was down. Dow was down by 600, 700, 800, 1,000 points. But it was just a kind of a slow descent over the course of about a year or so, 18 months, and then it slowly started to recover. This correction has been far more violent. We're talking the Dow up until last week had lost almost 10,000 points over the course of about 3 weeks. We had some 2,500, 3,000, over 3,000 intraday swings on the Dow, which is unprecedented. We're talking 12, 15%, which is crazy. The volatile index was off the charts. I'm going to throw this out to you just to give some context here of where we're at. My portfolio has lost, on paper, doesn't mean anything, over $1 million in the last month. From February to now, it's down, when I look at the total portfolio holdings, over 7 figures. Now, I haven't lost any sleep over this. If you go on to my Twitter feed, as a matter of fact, I've been using any dry powder, any cash that I've had, and I'm always getting dividend checks every week into my portfolio. I've been putting it to work. Not trying to time bottoms, but I'm buying companies like McDonald's and Estee Lauder and Visa and Costco and Apple, Stryker, TD Bank, Royal Bank. I've been buying these high quality names at what I think to be more than reasonable prices. In some cases here, just recently up until a week ago, these are almost, in some cases, maybe as a lot of financial analysts have said, kind of once in a lifetime prices on a lot of these. And the yields or the dividend yields I'm locking in on these is pretty phenomenal. I mean, you can lock in, I think Bank of Commerce went up to close to a 7% dividend yield. That's absolutely uncharted territory for these. And remember, there is some risk in some cases that these companies might cut a dividend or eliminate a dividend. But in the vast majority of the companies I hold, the Johnson & Johnsons and the Apples and the Visas and the Home Depots, these dividends are well covered, and I actually think that they will continue to raise these dividends this year, even with what's gone on with the stock price. So stay the course is what I'm telling you. I have been staying the course. I haven't sold one single share, and I have not panicked at all, even with that type of portfolio drop, which some people I think would probably crawl under their bed and cry. This is par for the course. This is what markets do. If you've read my book or been watching my blog for the last 10 years, a correction of 10% or more we should have about every 6 to 7 months in the S&P 500. A correction of 25% or more is generally every 3-4 years. A correction of 50% or 35 to 50%, those come around every 10 to 15 years. It's been 12 years since the last one. We were overdue for this. Now, this has been way more severe than most people ever thought, because this COVID-19 it's a black swan event. Nobody saw this coming. Even though you always, on a side note here, you'll always see these guys that come out of the woodwork on Twitter and some of these blogs, these jokers, who always will tell you, yeah, I've been in cash since February and I saw it, now I'm buying back in. No, you haven't. But they're always out there, these guys. Stay the course. You should be looking at these type of things as buying windows if you're in a position to be able to buy. You know, the thing is, remember what I've told people, I look at my portfolio not on a dollar amount, but again, on what that portfolio is producing for me in the way of quarterly dividend income and annual dividend income. Very few of the companies, if any, I'm anticipating will be cutting or eliminating their dividend. There are a lot of companies that will be. I mean, they've already started. If you're in the oil and gas stocks, you're going to get decimated. Airline stocks, hospitality, cruise ships, they will, any of those that are paying a dividend will be eliminated. You're in the blast zone there. But the companies I own are pretty well insulated from a lot of that. The stock price has taken a beating, but I'm expecting those dividend flows to keep coming, even with my Canadian banks and the telcos, the BCEs and the Telesis. Stay the course. Follow me on Twitter. We will get through this. We always do. It's going to take many, many months before we start to get some good news here and the stock market will start to rise again. It could take years. It could take 5 years before we get back to where we were last month as far as the valuations in the S&P and the Dow. I don't know. It could take a year. Nobody really knows. But what I'm doing is I'm buying good quality companies when I've got the cash to do it. I'm buying them at very good, what I feel anyways, to be very good valuations and locking in some incredible dividend yields right now. And I could care less if I pull the trigger on some Visa or Estee Lauder or McDonald's shares today and next month it's down 5%. I'm okay with that because I'm not going to sell these shares in 5 months or a year or 2 years. I may never sell these stocks, any of them. I might just keep them and collect the cash flows, and when I pass, it'll go to my heirs, my wife, and to charity. I'm just going to live off the dividend flows. That's the best way to do it. You bulletproof your portfolio there. But people that sold in some of these, in this eye of the storm here, and there was many that did. We're starting to see the numbers come out from Vanguard and iShares. There was a large, apparently a lot of mom and pop or retail investing selling on the S&P 500 and in stocks in general. And that is terrible. You know, these people that sold at these prices down here, and nobody ever admits to it after the market goes up. Nobody ever sold back in the week of March 16th to the 25th. They were buyers, they'll all say, in hindsight. Watch some of the posts I put on Twitter here. But somebody sure did sell when we had 2,500 point drops in the Dow and sold at these fire sale prices. You know, these people, you know, they're weak hands for sure. And if you have to panic and sell in those type of environments, then you had no business being in stocks in the first place. You didn't understand what you're buying. People should realize it. Some people just look at the stock market like an enigma. It's a bunch of stock symbols and prices, and they go up and down like a Vegas, gambling machine. And that is not what you're buying. You know, when you buy a share of Johnson & Johnson, let's say, you are buying and participating, you own a small percentage, a 1/100th or 1/500,000,000% of Johnson & Johnson. You now have a CEO, a brilliant CEO like Alex Gorski working for you. You now have their 250,000 employees worldwide working for you. You now own a piece of the patents that they possess. You're now sharing in the profits and the cash flows that they produce every year in the tens of billions of dollars that they earn. Every time someone buys a bottle of Listerine or Tylenol tablets, you participate in a small share of that. That's what you're buying. And as I think it was Warren Buffett or Peter Lynch said in one of his books, maybe someone can tell me who it was, you know, when you buy a share of Johnson & Johnson and tuck it away in your RRSP or your TFSA or your cash account, when you're buying these great American companies like Procter & Gamble and Johnson & Johnson and Apple, or even a TD or Royal Bank or a Bell Canada, when you pull the trigger on that, essentially you're a believer in a better tomorrow. And that is so true. Remember that. When you buy a share of Johnson & Johnson today, you have to ask yourself, do I see Johnson & Johnson still selling Tylenol and still selling Listerine and still selling pharmaceuticals and medical devices and adding new patents to their roster? I do. Do you still see a company like Apple selling iPhones? And do you still see people subscribing to iTunes and building their recurring revenue streams? I do. We might have a little setback here for the next 6 months. We are going into a recession, folks, both in Canada and the US, and it's going to be some choppy waters here for a few years. But these great American companies will rise. They always do. Provided you're, again, buying the right companies like a Johnson & Johnson or an Apple or a Procter & Gamble. People are still going to buy Tide. They're still going to buy Crest toothpaste. They're still going to buy Duracell batteries. People are still going to drink Pepsi. They're still going to buy potato chips from PepsiCo. There's always these choppy waters, and they're still going to produce incredible cash flows. They still got strong balance sheets. They're going to continue to buy back shares. You know, Apple has been, better believe Apple has been buying back tens of billions of dollars of shares during these last month when Apple share dropped $100. They're one of the major buyers that props that stock back up, which reduces the share count, which just boosts the price. You've got to learn this stuff, what you're buying with the stock market. You're participating in these incredible American corporations and the profit margins. You own it. But the stock price is going to be volatile, and we will get these violent sell-offs. Look at them as buying opportunities for the right stock. They have to be the right companies. It doesn't mean buying Tesla or some of these tech startups that aren't earning any profits and have, in a lot of cases, no future of ever earning any profit, in my opinion. They are very speculative stock. I don't own those. Those aren't the type of companies I own because I'm an investor. I want companies that are profitable, have cash flows, run by really smart CEOs, and are going to reward me as a long-term shareholder, which they always will. You buy some shares of TD and Royal Bank today and hold them for 20 years or Bell Canada, you will be rewarded. Trust me on this. Not only that, you'll collect a 5% dividend while you own it. But you have to be patient. You never panic in meltdowns like we've just had. Look at what your portfolio is going to generate for you as far as income, as opposed to just the day-to-day value of your portfolio. It'll help you sleep at night. These things happen, and we will get through them. You have to be an optimist in life. I keep telling people this. Only two ways to go. Doers and don'ters. You know, these type of things reveal character. And I see it every day, just in crossing paths with people on how they're looking at this. This is a terrible pandemic that's going on. I feel for all the people that are losing their jobs and in the blast zone and the entertainment business and hospitality and airlines. This is terrible. But you have to be an optimist. We will get through it. Being negative and the world is going to crash isn't the answer. And I finally just leave you with, so I've been, as you guys know, been pounding home so long now. Be careful who you're listening to here. There is a lot of conspiracy stuff out there. There's a lot of misinformation. There is a lot of people making this far worse than it needs to be with fake information. And again, I'm going to take another shot at it here. People, stop watching the constantly negative network, otherwise known as CNN. In my opinion, CNN is fanning the flames on a lot of this panic. They're making it far worse than it needs to be. Limit your news here, because, and that's the other thing why I did a blog a couple of weeks ago where I didn't address this at first. Get your mind off some of this stuff. That's why going forward, I will be brushing on this moving forward here throughout the spring. But I'm also going to keep peppering you with just basic real estate stuff. I'm going to talk about the insurance rates. I'm going to talk about home inspections. I've got lots of stuff I'm going to talk about. We don't need to have this 24/7 on coronavirus. I take in about 15 minutes a day, and that's it. That's all I need to know. And you should too. Tune out CNN. You want to be aware of these things and what's going on. But don't flood your, be watching this stuff nonstop. It's not going to do you any good. Go for a walk. Go for a bike ride. Read a book. Get your mind off some of this stuff, because it's not going to do you any good. It's just going to perpetuate the panic. We're going to get through it. We're in uncharted times. Stay tuned for some more updates. Again, I have no clue really where all this is going to end, but I do know that in a year from now, next year, I think things will definitely be much different. And I'm going to say that probably by the summer, I think things will also be much brighter. I think in 2 to 3 months, we'll get a much better handle on this. The cases will go down. They'll allow some social interaction to begin. Maybe the sports franchise leagues will start up again, and we'll get some optimism. We'll do it. I'm Owen Bigland. As always, I'll see you next week.